China maintains an open architecture distribution network, one that is nonetheless still dominated by banks, although we are now seeing that landscape starting to change. Online distribution is playing a larger role, IFAs have greater potential, but at the moment, the tenable partners in those areas remain fairly limited, as do the product types that are feasibly pushed through those channels. When it comes to China, it's rarely a good idea to speak in generalities, but with distribution, the fundamental question remains, how do you get your products on those shelves? And that's a function of both platform choice and product choice. In terms of platforms, when it comes to banks, you get what you pay for. It comes at a price, but those assets tend not to be sticky. With alternative platforms, there's a potential for greater success and stickiness at a lower pricing point, but the product range right now remains somewhat limited. So then it becomes a trade-off between raising non-sticky assets or dabbling in alternative channels, which are still unproven. On the sales side then, there's also the question of channel managers not being incentivized to seek out stickier assets at lower pricing points. For product choices, alternative channels have proven relatively successful when it comes to money enhancement or MMF, cash management products, but it remains an outstanding question how that will translate to more traditional products. There's also the larger question of the end customer. Does the end customer of those channels really want a wider product range right now? Is the demand there? So we're in this equilibrium where banks remain the default distributor of choice, but aren't really attempting to deal with the possibility of new entrants. At the same time, the push for diversification of channels is coming from bottlenecked players rather than distributors or customers themselves. That, of course, depends on demand, and demand will only keep changing in the coming year.